Let's get in the Managing Director, Mr. Ujjivan Davis, who joins us right now on the phone line to talk about all of this and more. We'll get to the implications in a bit, Mr. Davis, but can you give us some details? The numbers that we have right now is that you're going to file for the IPO. Any timelines, any valuation parameters, because the street is still not clear about what kind of valuations would the new listing have?
Good morning. It's good to be with Bloomberg. First and foremost, let me clarify. Ujjivan Davis, who's speaking to you, is the Managing Director of the holding company Ujjivan Financial Services Limited, which is already listed. The bank is the one which has filed the DRHP. And in terms of meeting the conditions, licensing conditions which the RBI has stipulated, we have to be listed by January 30th, 2020. We have examined several options. We have looked at several, ways in which we can get listed in the last 6 to 8 months, almost a year. We have been looking at this, talking to RBI, talking to advisors, etc. And we believe that one of the ways in which this can be achieved is the IPO, because for both the boards of the bank as well as the holding company, this deadline of January 31st is very important. Because we are on a journey. The bank is on a journey. It is, we will hopefully become a universal bank and, have all those sort of things in the years ahead. So when those things come up, meeting the regulatory requirements as and when required is very important. And that is why the January 31st deadline is very important.
Mr. Davis, is this a done deal, or is there a possibility of the RBI coming in and clarifying on certain counts that could change the approach that you've taken?
We are hopeful that there may be something in the SFB guidelines, which now that the RBI is putting SFB licensing on tap, they are reviewing the guidelines, and we are expecting those to be announced this month or early next month. So when those come out, if there is anything which goes to, address the issue of listing, then we will look at it. But based on the last communication that we had from the RBI, they have said that the listing condition is important. It's something that we have to adhere to. So that is why we have looked at various options. Now, obviously, one of our other SFBs has filed for a scheme. Now, if, of course, that scheme is approved, then it allows us to look at another option and look at that way of doing the listing. But at the moment, in terms of meeting the January 31st deadline, this looks like the most practical approach.
Okay, just to go back to that point, so while the RBI is reviewing the incorporation licensing conditions for, small finance banks, what is the probability of something like this going through? You spoke about one of your competitors and a scheme of arrangement out there. There are talks in the market that you probably do not have that much in terms of free reserves to go through with it, even if the RBI allows it.
Well, the reserves have been building up, so the formula which we can apply could be different to what, our competitor is doing. But, it can be done. It's not that once we apply for a scheme, then, within the scheme, we can put together different ways of addressing that issue. So in the last 2 years, our profits have been good. The bank's profits have been good, and the reserves have built up. Perhaps not to the degree that, the other bank has got, but it's a reasonable level as of now.
Because I remember last October having a conversation with Mr. Sumit Ghosh, and he said that they're looking at giving 60% of the bank share to existing shareholders. But, that is obviously if there's some changes. But keeping it with the IPO, what kind of dilution are you looking at?
Well, SEBI requires that the minimum dilution has to be 10%. So we will meet that condition. So it also has to be linked to what we can use the capital for that we are raising. And the bank has looked at their requirements for the next 2 to 3 years. And whatever we raise from the market will be available to address that requirement of capital. So we don't want too much capital to be kept in the bank, because then that has to be addressed and serviced. We just need the right amount to see us through for the next 2 to 3 years.
Mr. Davis, this 12 billion of capital via the IPO, does it, with an assumption that this is how it all goes through, does it open the door to a second round of dilution, because then you would have free reserves similar to that of some of the others, or adequate free reserves, let me put it that way, to bring down the promoter holding? And is that long-term game plan probably moving towards that, with an assumption, of course, that the IPO goes ahead right now?
There's one issue that I have to just mention, because now that we have filed at the RHP, there are some requirements that we have to meet, and I cannot speculate that far ahead as to what the circumstances are. But, the idea is that as a bank and as an institution, we have always taken and focused on the interests, a long-term interests of our shareholders. So even, if you look at the succession plan, which Mr. Ghosh has put in place, Mr. Chugh joined us on Saturday, and he is now part of the bank. So all of those are well thought out plans, and it is a management and a board which addresses the issues and concerns of shareholders. However, banking is a long-term perspective. We cannot give short-term solutions. If somebody is looking at, being with us for the long term, they are in the right place.
No, indeed, Mr. Davis, and I'm sure nobody has any doubts about that. It's just that this technicality brings about the holding company discount, as you would be well aware of, and the markets are trying to grapple with that as to what happens immediately and what happens over the medium term, and which is why my question. I mean, it was not with regards to the kind of processes that you put in place, but more about the technicality.
Yeah, you're right. The market, and there are other examples of holdco operating company sort of thing. Now, that is the structure we have. Obviously, the holding company has only one operating subsidiary and nothing else. So it is that closely linked. Now, the operations of the bank have been doing extremely well. And 2 weeks ago, we announced the first quarter results. And we are also holding firm to the full year forecast that we gave at the end of May. So having said all of that, the market has to make up the mind, as to what is the discount that they are looking at. Now, it is true that the holding company is one step removed from the operating company, but that step is a very small step. It's not that there are several other subsidiaries. So it's a call which the market has to make. And, the market addresses those issues in times to come. And they have to also see what is ahead. It's not just the discount. There are things which will evolve. And they have to look at that and take a judgment call on those things.